Forex trading for the absolute beginners. By the end of this video or series of videos, you are going to understand the foundation or the basic meaning of Forex trading and the ideas behind it, or the how it comes about to be, or what Forex trading entails. I want by the end of this series of videos, you will know what Forex is and the tools you need to trade, the methods of depositing and withdrawing funds from the Forex trading markets. And that includes methods, depositing and withdrawal methods using M-Pesa and other mobile banking apps or platforms. I say this because I am in Kenya and M-Pesa is a big thing. And also we'll touch on prop firms, what they are and how you can utilize them well. So what is Forex trading? Forex trading, just going to dive into the meaning of Forex trading and the idea behind it. If you look at what Google says Forex trading is, this AI overview tells us that Forex trading is the buying and selling of currencies in the global foreign exchange market to profit from fluctuations in their exchange rates, and it involves trading currencies in pairs such as Euro USD and speculating on whether one currency will rise or fall against another. The rest of it is just a lot of explanations, but I want to bring this to my understanding of what Forex trading is. I'll try and explain to my level based, or to my understanding of what it is all about, right? So first of all, Forex, the word Forex is a combination of two words, that is foreign and exchange. So these two words put together make the word Forex. And I want to use several analogies or examples to show what Forex or foreign exchange or Forex is all about. First of all, Forex, as done by Forex bureaus, is just changing fiat cash or fiat money from one currency to another. For example, if you are changing, you have fiat cash of 1000 USD, or fiat currency or fiat money, that is hard cash. Fiat cash or fiat money is money you have access to and you can spend it, or you can put it somewhere, or you can do whatever you want with it. That can be $1,000 in cash, or even in a bank, or in a mobile money platform like M-Pesa. If you have 100,000 Kenya shillings in M-Pesa, that is fiat money. So if you're changing this fiat money to, say, Kenyan shilling, at the current exchange rate is around 129. So you'll have 129,000 shillings. And that is because you're multiplying 1000 times 129, which is the current exchange rate. So this is mostly done by institutions or companies called Forex bureaus. So Forex bureaus, let me go back to drawing. Where is that drawing? Yes. So Forex bureaus, where is a pen? Pen. Yes. So Forex bureaus, I hope I get the spelling right, bureaus. Yes. The companies that enable somebody to change fiat cash from one currency to another, and we have a lot of them, hundreds of them, in especially in Nairobi. Let's say Nairobi CBD, so many of them. Wherever you're walking around town, you'll see forex bureaus around, especially in the uptown. The downtown you won't see much, because downtown is quite a hectic and chaotic place. But when you go to the uptown, you will see a lot of forex bureaus there. And also forex, this change of currency, this change of fiat cash from one currency to another, can also be done by banks. So I want to explain how forex bureaus do it, and it will give you an idea of how forex trading is done. So let me just open a new page. So assuming you are traveling to the US, you are going to the United States of America, right? You are coming from Kenya. I say I'm using Kenya because I'm a Kenyan, and you can relate this to your local country or your wherever you are. So you're going to the United States of America, but you have around 1,000. No, not, let me use Let me use 100,000 Kenyan shillings, and you are going to the USA, right? You know, when you go to the USA or the United States of America, you are not going to pay for services and products using the Kenyan shilling. You are going to pay for them using the US dollar. So the first thing you want to do is to change this 100,000 Kenyan shillings to USD, right? If you are doing this, let's say in you are traveling to the USA, let's say in 2021, early 2021, when the exchange rate was 1 USD is equals to 100 Kenyan shillings, right? So if you are doing that in 2021, early 2021, then that means you are 100,000 Kenyan shillings. If you not do the multiplications, it becomes what? 1,000 US dollar, right? So what forex bureaus will do at this point is they will not sell this USD at a flat rate of 100 Kenyan shillings. What they do is they buy low. Actually, they are selling high. At this point, they are selling the USD to you. So you'll find that they are selling the USD to you at around, let's say at around 105 Kenyan shillings, right? So when you change this 1,000 to, when you change KSH 100,000 to what? USD at an exchange rate of 105. Let's use an example of 105. What will you get? If you do the multiplication, you will get this time it's division. You will get that let's go to the calculator. You will get that you have 100,000 Kenyan shillings divided by 105 Kenyan shillings. So you will get around 952, right? 952 US dollar, right? And then the reason they do this is so that they can make profit of $5 for every dollar they sell to you, right? So this $5 is their profit margin. And then when you're coming back from the US, you're coming back from the US and you have 1,000 US dollars, right? And then you're converting it back to KSH, and the exchange rate is at around 100. The forex bureaus will not sell it to you at a flat 100 Kenyan shillings. Instead, they'll convert at the exchange rate of let's say 95 Kenyan shillings. So that means this minus 95 or minus $5 is their profit on changing, their profit for changing the $1,000 to Kenyan shillings. And when you do the math, is $1,000 times 95, you get 95,000 shillings, right? 95,000 Kenyan shillings. So actually, if you do the subtraction from 100,000, you realize at the selling point they have made like what, 1,000 minus that 105 minus 100, you get 5 bob, and when you multiply 5 bob by 1,000, you'll get they have made 5,000 Kenyan shillings as profit. So this is how forex bureaus are making money for changing or for doing forex, for changing fiat cash from one currency to another. So what they do is they buy low and sell high, and that is how they are making profits, right? Now let us use another example, especially as an individual. Now you want to see how you can benefit from this, how you can benefit from forex trading, especially if it is forex trading in the form of fiat cash, right? So you're now a Kenyan going to the USA early 2021, when the exchange rate of the USD to, where are my tools now? The exchange rate of the USD to, I'm trying to escape. Exchange rate to $1 is equals to 100 Kenyan shillings, right? So in 2021 you had 100,000 Kenyan shillings, right? And then you converted it to USD at a flat rate of, at a buying price of around 105 Kenyan shillings. The math we did, it gave us what? Let's try and clear that. 100,000 divided by what? 105. You will get 900. No, you're multiplying, Jamini. You're dividing. So 100,000 divided by 105. You get 952 USD. But you went to the US in 2021 and your host told you you will not spend this $952 because your host has decided to take all costs of your presence in the USA upon himself. So that means for everything you're buying and every services you're paying for, it is your host who is paying for it. And that means your $952 will not be touched, right? So assuming that happens the entire year up to 2022, right? 2022, late 2022. You went in early 2021 and you are coming back late 2022, right? So late 2022, if you can remember well, if you are in Kenya, the price of dollar rose up to around 160 Kenyan shillings. So around $1 was 160 KSH, and now you are coming back from the US at this time, right? So at this time when you're coming back from the US and you have your $952, you're converting it back to Kenyan shilling, right? And at a flat rate of 160 Kenyan shilling, assuming the Forex Bureau will buy it at around 155 Kenyan shillings. So if you are now selling your $952 at a flat rate of 155 Kenyan shillings to bring it back to Kenyan shilling, and let us see how much that would be. 952 times 155, right? You get 148,152 Kenyan shillings, right? So you went to the USA in 2021, right? You converted your 100,000 Kenyan shillings and got $952. And then in 2022 you come back and find the US dollar has risen to 160 Kenyan shilling. You convert your $952 back to Kenyan shilling using the 2022 current the exchange rate of at around 2022, late 2022, and now you get 148,000 Kenyan shillings, right? Now remember, you started with 100,000, and 2 years later you come back, you convert it back to 148,000 Kenyan shillings. When you do the math, 148 minus 152, 148,000 minus what am I doing? 148,152 minus 100,000 shillings. You will notice you have gained a total of 48,152. So this money is money you never had in your pocket, right? And this is how now you should now put this into the context of forex trading. You have made a profit of 48,152 shillings because you went to the US, converted it 100,000. Let me just assume you went with 100,000 Kenyan shillings to the US, but you never spent it because your host decided to take your costs on himself. And then you came back in 2022. The current exchange rate was 160, and you converted it back to the Kenyan shilling, and you get 148,152 instead of 100,000. So your profit on this was 48,152 shillings. Now with this you will realize you have participated in forex trading without even realizing it, right? But this one you didn't realize it because yours was just a way, yours was just circumstantial. You are going to the US and coming back. But then there are people who want now to benefit from forex trading by taking advantage of the US dollar, right? US dollar moving from 100 shillings to 152 shillings or 160 shillings, let me say 160 shillings in a span of 2 years, right? So this now becomes speculative, and this is when our forex trading becomes a very speculative affair. Now let me use another example which is not related to forex trading, but it will still give you an idea of how forex trading is done. So let me go to the concept of buy low and sell high in business. Assuming you are starting a mango business, you want to sell mangoes, right? You hail from Ukambani where there is plenty of mangoes, and during the harvest season you have a lot of them. Or actually, let me not say you grow mangoes. Let me say you are just a farmer, just a business person who wants to get into the mango business, right? So when you do that, you will go to Ukambani during the harvest season and get maybe 100,000 mangoes at around 1 bob per mango, right? When you do that, you will have spent 100,000 Kenyan shillings. Now this is a typical case of buying low. So you are buying at a low price, right? At 1 shilling per mango. And then when you come to the city, say you are coming to sell these mangoes in Nairobi, and you are going to sell them at 5 bob per mango, right? When you do that, you are going to, assuming you sell all the mangoes and they don't spoil or they don't go bad, and you manage to sell all the 100,000 mangoes, what you're going to make is 500,000 Kenyan shillings. So this is a typical example of buy low and sell high. You are buying at 1 bob per mango and selling high at the high price of 5 bob per mango. Now this difference in price is what becomes your profit, and this difference is 4 bob per mango, which becomes your profit. If you manage to sell all of them, this is around 400,000 Kenyan shillings. So the same concept, applying it in forex trading, I'll just still use the idea of USD and KSH, right? USD KSH, you are buying the USD, let's say at around 100 bob. You are buying it at a very low price, and then when you come back to Kenya, you are selling it at 160 Kenyan shillings. Now this is a low price, buying low price and selling at a high price. That is why you hear forex traders say buy low and sell high. So this difference of 60 shillings is becomes what? Your profit, right? So the same thing is applied in forex. You are buying low and selling high, but this time you are applying it to currencies. For example, in our local example, we have the USD KSH, right? And now if I tie this example to other currency pairs, now you will see we have USD, let me see which USD, JPY is Japanese yen, or USD CHF. And then now you can flip these currencies around and start trading GBP USD, and maybe Euro USD. You see how the two tie together. USD KSH, now we are coming now to trade these other currencies. Now does it mean that you should spend fiat cash to convert euro, to convert your Kenyan shillings to euro, and then you should be able to trade euro and USD? That is not what it means. Nowadays we have systems in place that now enable you to trade euro USD without necessarily owning fiat cash in euro USD, and that is what we'll be coming to when we talk about CFDs. But still, I will go back to giving you maybe another example, or another typical example of how you can actually benefit from trading this or using this, but now when you have fiat cash and you do not necessarily have to travel. And what is that? Opening a new page. Nowadays, banks all over, even in Kenya, you have banks that are able to give you local accounts and, forgive my handwriting, and foreign accounts, right? Foreign accounts are accounts that are now able to hold money in foreign currencies, right? For example, if you go to KCB, and I am not marketing them, this is just an example. KCB, if you go to open an account in KCB, you have the option of opening a KSH account and a USD account, right? So assuming you opened a USD account in 2021, no, assuming you opened these two accounts in 2021 when the USD was at around 100 shillings, right? And then you deposited 100,000. You deposited 100,000 Kenyan shillings, but instead of keeping it in your KSH account, right? Instead of keeping it in your KSH account, you converted it to USD and kept it there, and this probably became $1,000. And then for the 2 years when the USD was rising to 160 shillings, you did not touch this $1,000. Now you come back in 2022, late 2022, and the US dollar is at 160 Kenyan shillings, right? And then you convert it back to Kenyan shilling, and you will have 160,000 Kenyan shillings, right? This is how you can hold, actually this is how you can hold the value of your money if the local currency is not performing so well. You just convert it to USD, put it in a USD account and leave it, right? And when you come back to convert it to KSH, the value of the Kenyan shilling has significantly dropped against the USD, and when you convert it back, you have 160,000 Kenyan shillings, right? So you will have 160,000 Kenyan shillings, and you realize by just waiting for 2 years or 1 year, you have made a profit of 60,000 Kenyan shillings. Now this is one way. This is just another analogy where you have actually participated in forex trading without realizing it. However, this time you are preserving the value of your money or your 100,000 Kenyan shillings, but you did not know whether the US dollar will rise to 160 Kenyan shillings, right? So at this point it is very circumstantial, but other people do it for speculative reasons. They put the US dollar, for example, right now the US dollar is trading at 129, right? And then if you convert if you store $1,000 in USD account, and then you come back maybe in 2026 and the value has risen to 135 Kenyan shillings, you know this rise will give you a profit, right? So that becomes a speculative reason for holding your money in USD. Now I said we can do this without necessarily owning the fiat cash. For example, in this example, we own the 1,000 USD and we can choose to spend it. But in cases where we don't want to own the asset, we introduce the aspect of CFDs. Right? We introduce the concept of CFDs. What is CFDs? CFDs stands for contract for difference. Let me just Google that. What does what does CFD stand for in trading? Let me just do that. In trading, stands for contract for difference, a financial derivative that allows traders to speculate on price movements of an asset without actually owning the asset itself, right? Traders open a CFD contract with a broker, agreeing to exchange the difference between the opening and closing prices for the asset. This means a trader can profit from both rising and falling markets by going long buying or short selling. Now, without going into too much details, CFDs, as you can see, stands for contract for difference. What difference are we talking about? The difference in prices. The difference in prices when the difference in a price of one currency against another, or value of one currency against another. Now this enables traders or individuals, let me use individuals. This enables individuals to trade a certain asset, let me just mention the asset, without necessarily owning it, right? This asset, in our example, in the local currency, or in the local example, we have USD KSH. In your country, it can be USD South African Rand, it can be USD which other Naira, USD against the Nigerian Naira, it can be USD against your local currency. However, because in Kenya we know that the Kenyan shilling does not hold much value against the USD, we want to trade currencies that hold much higher value. For example, Euro, USD. Now this holds a higher value. So instead of trying to trade USD KSH, what CFDs enable us to do, it enables us to trade Euro USD. And this means you can actually trade Euro USD without owning the fiat cash in euros or USD, right? And that means you cannot try and speculate the difference in value of the euro against the USD, and when you are right, you make money on it, and when you are wrong, you lose money on it, right? So this is what CFDs enable us to do. And you will ask yourself, now how do I get started with trying to trade CFDs? CFDs now will require you to have a few tools. The tools that will enable you to be able to trade Euro USD or any other assets, which I will come to later. Assets, we'll talk about assets. I will come to it much later, right? So when you talk about now the tools you need to trade for trading what? CFDs. Now at this point you should understand that trading CFDs is speculative. It is not a sure bet of way of making money. It is speculative, and that means just the same way you're taking risks in running a small business, or you take risks in running in going for a job you do not know whether you'll perform well and get rewarded, or you'll perform bad and get fired. It is the same thing you will apply to trading CFDs, which is now a risky business. At this point it becomes a speculative venture, which now carries its own sets of risk. But before you go to talking about risks, can we talk about the tools needed? The first tool you need is a broker. A broker is the one that will provide you with a platform to be able to access these assets and execute trades on them, right? No, a broker will give you access to these assets so that you can trade them as CFDs, right? Now we have so many brokers, and then I think I'll come back to that. And then the second tool we need is what else do we need? You need a trading strategy, right? Now a trading strategy, because this is a speculative business or venture, you'll need to have a system that helps you speculate whether the asset, a certain value of an asset, will rise or fall, and then you get into a trade to benefit on the difference in that value, right? And then the third tool you'll need is a trading platform. A trading platform is a platform that enables you to place buys and sells, or enables you to execute trades, so that as the price is moving up or down, you are benefiting or you're losing. And then the fourth tool you will need is what other tools are there? The fourth tool you will need is you have a broker, trading strategy, trading platform. We also need funds or money, right? You will need to deposit money into a broker so that you are able to trade. If you do not have funds, there's something called demo account or demo funds that you can be given by a broker to practice whatever you are trying to learn. Now I will be very straightforward with you. Getting a broker is easy, it's not hard. Getting a broker is easy. Getting a strategy, you can get a lot of them on YouTube. A platform, it's easy. You have MT5, you have TradingView. Money is where we might have a small problem, right? And even if you don't have access to funds, you can use demo money or demo funds or demo account, right? The biggest problem when it comes to learning Forex is something we call, right, psychology. Psychology, because trading is a very mechanical thing. It is not emotional. It is not like, it doesn't need, it's a logical process, or it's a logical, let me say, it's a mechanical process. And you know, mechanical processes do not care whether your emotions are right or wrong. And that is why, and this is where a lot of beginner traders mess up a lot, because their psychology is not right when they are trying to learn Forex trading. Now their psychology, it has been proven beyond any doubt that the psychology of a man, or the mind of a man, prevents or runs away from risk, right? The mind of a man is risk evasive. Risk evasive. That is why a lot of times your mind tells you something that you should do and something that you should not do. Your mind will tell you this is too risky, don't do it, right? And it will tell you this is not risky, you can do it. The problem with the not risky things, they are in your comfort zones. You are trying to avoid risks so that you can be comfortable. But by taking risks, you are going against what your mind believes in. And that wrecks a lot of traders, because the mind is not built to trade. The mind is not built to be a mechanical thing. It is a very psychological thing, right? So it is based on your emotions. How do you feel today? You feel like you're going to buy, or you're going to trade, you're going to sell. But even if the feelings are not there, the markets or the trading markets do not care about your feelings, or do not care about the state of your mind, right? So a lot of trading processes or strategies are mechanical strategies, but they are going against how your mind is built to be risk evasive. That is why the hardest part about trading is actually psychology. And this is something now that takes years for traders to master. You need to master your psychology. And why do you want to master your psychology? So that you can make it mechanical to trading platforms, to trading Forex. Now, the problem with having a mechanical mind is it wrecks you in terms of socializing with other people, but then it benefits you when it comes to trading. When you find a nice balance between the two, is when now you can be able to maneuver the world of Forex and maneuver the real world without any problems. And psychology, as I have said, is the hardest part. This is where a lot of traders take time to master it, or to master their psychology. So those are the tools you will need to trade, right? Now back to these tools, just for a minute. Most often than not, these tools are let me try and use a different color. These tools are provided maybe by a broker. You'll have a broker, right? A broker that will give you a trading platform, and will give you demo account to trade. And what else? Yes, you'll have those two things, a trading platform and demo account. Otherwise, if your broker is not giving you this, then a trading platform is separate. You can have something like MT5 and trading view, right? So but most often than not, a broker will give you access to a platform, which is MT5 and TradingView, or any other platform, and it will give you funds or money in form of demo account to practice your strategy. The broker will not give you a strategy. That is something you build on your own with time. Now, a broker also gives you access to these assets. You remember these assets? Now, these assets are like Euro USD, GBP USD, USD KSH. You can get a platform with USD KSH, but why would you trade that? And other assets that I will talk about in the next few minutes, right? Now, I think this should cover what the idea behind Forex trading. Now, when you have this idea as a beginner Forex trader, you can now get into forex trading, knowing what the idea behind it. Now the goal of getting into forex is, the end goal is to make money, but there are various steps and processes you have to take for you to get there, right? And those are the processes you need to focus on so that you can get them right. And when you get them right, is now when you are able to make money. Actually, the end result is making money. It is not like the first thing you want to focus on. The first thing you want to focus on is getting the right things, the right tools, and the right psychology for you to be able to get into the trading markets. And when you get there, it is just a number of games. That's why we'll have things like risk to reward ratio, win rate, and when you put them together, the end result is being profitable and being able to make money. And now this gets the idea out of your head that forex trading is a get rich quick process, or a get rich quick scheme, because if you put all these things together, you will realize it will take some time for you to even get $10 or $50 out of the market. It will take you some time to get maybe $100, or even you can still lose, right? But if you have the right thing, if you follow the right process, if you follow the right procedures, and you get the right tools, then making money becomes inevitable. Actually, it becomes the end result, right? So the first thing you want to focus on is getting the right information first. And this information is what I'm trying to give you right now. So I think I'll pause here. This video is around 40 minutes or maybe 30 something minutes. So in the next part, we are going to talk about a broker. We'll talk about what? We'll talk about this broker. Which color can I use? We'll talk about brokers and assets, and then we'll also talk about trading platforms, and then we'll talk about funds or money, and we'll touch on demo accounts. We are not yet going to the trading strategy because that is something you have to build on your own, but I'll still touch on it and just give you an idea on how to build a trading strategy, right? So at this point, I'll say bye bye until the next video. See ya.